Whole life insurance? When most people hear that, they just think, wow, that's just overpriced life insurance that I don't need. And you know what? I used to think the same darn thing. But what most people don't realize is that if that whole life is designed and engineered properly, it can be way more than just a guaranteed death benefit. It can be a tool that you use to accelerate your wealth while you're living. You can do things like buy real estate, or pay off debt, buy big purchases like cars, anything that you would use a bank. I mean, you get to do what the wealthy have been doing for hundreds of years. They created their own private banking systems and became their own bank. And that allowed them to take back control of their money just like you can. Today, I'm gonna walk you through the myths and the truth about how I've used this strategy for over 20 years to take back control in my life, and how I've helped people just like you do the same. I'm Chris Naugle, and this is What Now? What's next? Let's dive in.
Let's dive into whole life insurance. And let's talk a little bit about the product. What is it? Well, it's a life insurance policy that was designed to last your whole life. It has been around for hundreds of years, and you can trace its origins way back. It's one of the first life insurance policies that was ever created. And one of the cool things about whole life is when you make your premium payments, okay, we're gonna get into premium deposits versus premium payments, but when you make your premium payments into a regular off-the-shelf whole life policy, like what I used to sell when I was at New York Life and what most insurance agents sell. A regular whole life policy, you make a premium payment, that premium payment goes to pay for the death benefit, that really expensive death benefit. But on the good side, that death benefit will be with you your entire life. You cannot outlive it. If you make it to 121 years old, the policy will endow and they'll just pay you the death benefit. Very different than term insurance, which is exactly like it sounds. You're renting your insurance for a period of time.
Hey, I think I'm only gonna live for 10 years, so I need one of those 10-year term policies.
And hey, if you die, or as I like to say, graduate to a better place, in 10 years, you win. If you live 11 years, the insurance company wins. And you get to pick that term. So it's kind of like you gambling and betting on how long you need to rent insurance for on your life. So how many of you know how long you're gonna live? I hope none of you, because the only one in charge of that is God and the actuaries at the insurance companies, because they also know exactly when we're going to die. It's a freaky thing, but because they know when we're going to die, they know for a fact that most term insurance policies, actually less than 2% of all the term policies ever sold by Dave Ramsey, Susie Orman, and all those agents out there saying buy term, oh, and invest the difference. Not working so well right now, but we won't go there. They know that less than 2% of those policies are going to be paid out because you don't know how to guess when you're going to die, but the actuaries do, and they have it figured out to a science. That makes term insurance one of the most profitable products that any life insurance company has in their arsenal of products. And then there's that age-old policy called a whole life, the least profitable product for a life insurance company, but the most sustainable product for a life insurance company. You see, whole life guarantees to the insurance company that the client, as long as they want to maintain the policy, will pay for their entire life. Term insurance, it's only 10 years, 20 years, 30 years, or whatever term you decide to buy. So the two of them work really well together. But let's come back to the myths about whole life. One of the myths is that whole life is an overpriced, expensive, high commissioned product. Well, I guess there's some truth to that. A regular whole life, when you make your premium payment into it, you're paying for a death benefit that will be paid out someday when you graduate, anytime during your whole life, and that premium is certainly more expensive than the term policy. Why? Well, because the insurance company knows 100% they have to pay out that death benefit, so of course it's more expensive. It's better. It never ends, it never terms out, and it will be there. Secondly, over time, those premiums you pay into that life insurance policy, that whole life, not all of them are going to be used for cost. So over time, the insurance company is going to give you cash value. And that cash value will start building usually in a regular whole life policy around year 3. You'll have a little bit of cash value, wee little bit. So you pay all these premiums in, you get a wee little bit of cash value. And every single year in a whole life, the insurance company, as long as they're a mutually owned dividend paying life insurance company, they'll pay you a dividend. So over time, the interest you earn on the cash value and the dividends will amass to, well, a pretty sizable amount of cash value. Nothing to write home about, nothing that you're gonna be super pumped about in a regular whole life. But here's the myth. The myth said by Dave Ramsey and Susie Orman and so many others is that there's only one kind of whole life. There's only one way to slice up that whole life, and that's that really bad, high commissioned product. Oh, let me transition. I missed one really important thing that I said earlier. Commission. Well, who gets paid the commission? The agents, the financial advisors, the financial services professional, your broke-ass brother-in-law that tried selling you that whole life, right? Yeah, how much are the commissions? Well, most whole life policies will pay a commission of 55% of the premium. So let's just do the math. In a regular whole life, if you pay 10 grand in premium, that agent, yeah, they're making about 5,500 bucks. Now I know what you're all thinking. You're thinking, wow, that's a big commission. That's a good day in the office. Yes, it is. It sure is. Well, how much are the commissions on term? The same, usually 50, 55%, sometimes as much as 90%. So even though the premiums you pay on a term are less, the agent, the advisor, or whoever sells you that term policy, maybe it's Dave Ramsey himself, they're making a commission and it's probably a higher percentage than what the whole life pays out. But let me wake you up to something that's really interesting. You've probably by now heard about those products that you know that I do not like, called IULs, Indexed Universal Life. They're the hottest product in the marketplace right now, and they're the highest sold products in the marketplace. Why would that be the number one product? Why would that be the number one thing your financial advisor is pushing you to? Wake up, folks. Commissions. When people say that whole life is the highest commission product, they're completely wrong. It's the IUL that's the highest commissioned. So remember the math we did on a whole life? 10,000 gets the agent paid 5,500. Well, how much money can they make on those IUL policies? These new great products that allow you to tap into the upside of the index, which is the stock market, which by the way is going down, which means you're not tapping into anything but losses because of cost of insurance. But anyway, why are they sold so much? Why does every advisor want to sell you one of these? Commissions, commissions, and commissions. And because they don't know what they don't know. How much is a commission on an IUL? Well, it can be 120%. So for that 10 grand in premium you put into that awesome IUL, they can make $12,000. You want to talk about a good day in the office? That's a good day in the office. But I'm not here to talk about IULs. I just want you to understand whole life, term, and IULs and other products. Why is it that the insurance companies and the brokers want to always poo-poo on whole life, but yet hurrah-rah on IULs and term? Well, because it's the most profitable thing for them and for the insurance company. And because the insurance company knows this, they put all their marketing dollars toward term. How many ads have you seen? How many commercials have you seen about whole life? Probably none. How much have you seen about IULs and term insurance? That's all you hear about. Is it all making sense now? This is the myth. The myth is that the whole life is the bad guy, but the bad guy is really the IULs and the term in a roundabout way. Now, I love term insurance, and I own a lot of term insurance. And in the policy designs we do, we use term riders a lot. So now let me talk about another myth about whole life. A lot of people and a lot of you probably think that there's only one kind of whole life. So when you watch my videos about infinite banking, specially designed whole lives, and you're like, wow, this is cool. You rush out to your trusted insurance guy or gal, you rush out to your trusted financial advisor and you say, I need one of those whole lives. And they get all smiley, oh, I'm happy to help you. And they design you a policy, and you look at the policy that was designed for you, and you look at the policy that you saw in my videos, and you look at the one they did and the one that I did, and you're like, somebody's lying here. Either that Chris guy's a scam and not telling the truth, or my financial advisor doesn't know what they don't know. Well, you're right. It's the second part. They don't know what they don't know, because a whole life can be designed a lot of different ways. Now here's the problem and the myth. Not every whole life is the same. You see, we only work with a handful, literally 5, mutually owned insurance companies that pay dividends. Why? Because those 5 allow us to custom build, design, and engineer the whole life to do what we do with that, which is to provide high cash value so that you can immediately take loans from the policies in the first 30 days. There's not a regular whole life out there that allows you to do that ever. And there's not an IUL that allows you to do that ever, unless they are custom designed to do exactly that. We all know cars, right? Now you know what a Ford Focus is, do you not? It's a practical car, it's good on gas, and they're relatively inexpensive. So if you walk into the Ford dealership and you see that shiny blue Ford Focus sitting there, the base model, do you run up to that thing and be like,
Honey, come here. Look at this awesome car. We gotta have this car. It's so sweet.
your spouse would sit there and look at you like, that's not the car we came here to buy. We want to look at that Lincoln Navigator over there, that real fancy one. Although you don't get excited about the regular Ford Focuses come in lots of different models. And let's parlay over to some YouTube videos. This guy, he's a legend. I know he's no longer with us, but his name's Ken Block. And you can find videos all over the place of him going 130 miles an hour sideways around a turn in none other than a Ford Focus. So what's the difference between that blue Ford Focus, that base model on the showroom floor, and Ken Block's crazy 600, 700 horsepower rally car that is a Ford Focus? Design and engineering. That is it. So when we look at whole lives, the myth is that there's only one type of whole life, and there is not. You see, you can take a whole life from a contractual standpoint. You can custom design and engineer that whole life to do things like we do. Create high early cash value. Create a policy that has cash value available immediately in the first 30 days. If you told your advisor that there's a whole life that you could take money out of immediately in the first 30 days, most of them would say, bull, that's not true. And you know what? I used to be one of those advisors. So some of the myths about whole life are simply, it isn't what you think it is. Whole life is one of the best life insurance policies in the world. And the good news is, well, bad news for some, it's only available in North America. Yeah, that's right. All the other countries, UK and Australia, they don't have whole life. Why? Because their governments don't want it because of the tax treatment of how it works. You see, when you put money in the whole life that we design, we don't even call it a premium. We call it a premium deposit. That money's going into the specially designed whole life to be then used for the infinite banking concept. So it is a deposit. But the other thing that you need to understand is all the stuff that you've heard sometimes isn't true. And it isn't true because either the person telling you it doesn't know the truth, hasn't learned the truth, or simply doesn't want you to know the truth. Because the person telling you that may know that to design these policies the way we do requires them to reduce their commission by 60 to 90%. So you remember we were talking about those big old commissions and Dave Ramsey talking about those big old commissions on these whole lives? Well, what we're doing is we're designing it and engineering it so that that commission is literally 60 to 90% less. So when you think about things, I always want you to remember what Will Rogers said. The biggest problem in America is not what people don't know. The biggest problem in America is what people think they know that just ain't so. What is it that you don't know? Or what is it that you think you know that just ain't so? I want you to really dig in and think about that. And this isn't just for whole life, this is for everything in your life. But I hope this gives you an idea of what it is we do and some of the myths around this product called a whole life that might just be something you need to learn more about. My name's Chris Naugle. This is What Now, What's Next. Hey, if you liked this video, then well, why don't you give me a subscribe and give me a like? And while you're at it, there's a little bell. Check it out right here. Bell. Yep, smash that bell, just smash it, because then you'll be notified every time I create a new video, and you're gonna wanna know more about this. I went deep into the myths, but you probably wanna know more about what it actually looks like. So what I did is I created this video right here, how the infinite banking concept works. Check that video out, and we'll see you on the next one.